Welcome back, everyone, to Stock Market Weekly. I am your host, Evan Medeiros, and this is episode 723 for March 15, 2024. Hope you're doing well out there. I'm a little bit tired, but I'm rallying for the show here. It's the end of the week. It's been a long Friday, long week. Let's get into some of the headlines. Big story here on Friday, of course, was quad witching. So this comes around 4 times a year. Basically have a lot of options expiring, lots of different sets of options expiring, leads to very heavy volume, some peculiar moves sometimes. And it's always interesting to sort of observe the market behavior kind of on these days, right before kind of leading into quad witching and then right afterwards. There's a lot of positioning that sort of shifts hands here and gets re-hedged or allocated or migrated on to the next option cycle. So it'd be interesting to see how we follow up with next week's trading and sentiment, or temperament in the market is really the word I'm looking for. It was a turnaround week here for kind of that whole inflation trade. We had yields rising this week. We had the dollar spiking back up. It's kind of the inverse of what we've been, looking for, where the dollar is kind of rolling over. That's what we had last week. We had yields coming back down, and we got the whole flip script. We got mega cap tech basically leading, trying to prop up the market, while everything else, the smaller caps and just some of the lesser growth or the more growth type names getting hit this week. So NVIDIA really didn't break down any further. It was one of the first to show some warning signs, but bears couldn't really get a lot more selling pressure in there. We had Microsoft making new highs on Thursday. So this is, again, just a slightly different type of flip on its head type market this week than we've had the last couple. And of course, we've got the Fed out next week on their latest policy decisions. We don't really expect that they're going to be cutting rates. I think there's like a 99% price in here that we're keeping things just as they are. But of course, we're going to get comments and sort of thoughts here looking into forward meetings. So that's what the market will be waiting for. So expect some volatility on Wednesday. So let's get into these charts here in just a second. All right, we've got some charts in front of us. TC2000, that's a charting platform we use throughout these videos. We are supporters of this platform. So if you need any type of development work, or if you just need some new scan ideas, indicator ideas, you want to work with me on some tutorials, reach out to us on the website. We've got lots of cool things built for TC2000. And right now there is a $25 coupon code for traders, new traders that want to get access or start a subscription with TC2000. We have a coupon code in the description of this video. So let's get into the numbers here. Red across the board, 1 week changes. Everything is negative. Dow Jones, S&P just down marginally. Notably, though, this is, the back-to-back first couple of weeks we've seen of, I guess we'll call it selling pressure again, mild selling pressure, but certainly digestion, we could call it, maybe distribution, maybe something bigger. Nasdaq was down 1%, and the Russell 2000 was hit the hardest here, down 2% this week. Now, if we take a look at our volatility measurements here, Nasdaq vol and S&P vol, not a big change relative to last week. Again, the moves were fairly muted this week, but we did see that uptick. One of the themes we talked about last week was just this kind of more jumpy volatility underneath the surface. We sort of were looking at the VIX and kind of saying, looks like traders are kind of bidding it up a little bit more than it has been in the subdued sub 13, sub 14 levels. So that pretty much remained the same this week, and we have a market that's just a bit on edge right now. In terms of the sectors this week, we had energy at the top of the list. XLE really kind of blown away anything else. Materials also pretty strong. And then consumer staples rounding out the third. Fourth spot was financials. That rounds out really everything that was green this week. The hardest hit was real estate. So real estate was starting to put its act together, starting to really get its act together, but with interest rates back on the rise now, that throws kind of a wrench in that whole trajectory. So we had real estate getting hit, consumer discretionary, and technology rounding out the bottom three. If we take a look here at our sector trends. So this is our smart trend filter indicator. It's a custom indicator that we built. It's available for TC2000. It's also available for TradingView if you want to get this on your platform. But notice here, we didn't get a whole lot of trend changes. We do have technology, for instance, which is still looking pretty sluggish here now, printing yellow. Communication services, yellow now as well. But I do want to bring your attention to energy right in here in this grid, and you can see when we start to get separation in these dots, that does show strength, that shows momentum, it shows a pickup in demand. And so you're clearly seeing a little bit more of that elevated energy exposure, momentum trade, and of course that was the best performing sector this week, so that does make sense. You can also notice it a little bit in this materials chart as well. Now let's take a look here at market breadth. We always start with our 52-week highs and lows, and notably, I mean, we didn't see any real uptick yet in the percentage of stocks or the number of stocks hitting 52-week lows. That's good. We wouldn't really expect it. We didn't see a violent day of selling by any means, but when we look at our 52-week highs here, we did see things dry up a bit on Thursday and Friday. You can see, in fact, we technically got more stocks making lows, or the ratio was about even on Thursday and Friday. So that's something that we do want to pay attention to. We don't want those ratios to flip too much. We do want the market to cool off, to digest, right, to consolidate. It's had a good run, but we don't want to see dramatic moves and breadth expansion to the downside. So we're going to keep an eye on that every single week, as we always do. If we take a look here at Investors Business Daily, this is IBD's 50 list. This is the top 10 stocks. We're talking about IBD because they are a sponsor of the show. So thank you, IBD, for helping make this show possible. You can support us, support IBD with a link in the description of this video. Get access to their IBD 50. A couple of new names on here that I haven't seen. FIX, so Fix, is a new name on here. I saw them put up this week, and I think NVO, Novo Nordisk here, also pretty new on the list, but top performing, and it's been at the top of the list. So credit to IBD. They've really been on this GCT trade. I think they had earnings out this week and a 25%. So nothing too shabby in the wake of some consolidated sideways choppy markets. Let's get on to commodities here. We'll get through the rest of this data and then start looking at some charts. We had copper at the top of the list and DBA. So we had a real big expansion kind of thrust here in the agriculture commodity space. We're going to take a look at those charts in just a little bit. Oil was up 4%. Silver was up nicely. Dollar index, of course, we talked about, was now up. We finally got some digestion here in Bitcoin. You can see the IBIT Bitcoin iShares Trust here down 0.4%, so sideways to slightly down. Same thing with oil, natural gas. Continues to trade in its own sort of universe. If we take a look here at Treasury Yields, though, this is the important kind of chart. And, you know, we were almost, and this is why you can't celebrate victories too soon, is we were kind of looking at the rollover effect here over the past couple of weeks, where it looked like these yield indices here that we're looking at, 5-year, 10-year, 30-year, were starting to roll back over, almost like a bear flag, right? But that doesn't seem to be the case now, where we got this stubborn kind of rally this week, and we're moving back up towards these cycle highs. So it's, again, throwing in the wrench. It's the rotation trade we've been talking about since the start of the show, and we're going to have to keep an eye on this. Of course, as we mentioned, we have Fed Chairman Powell out on Wednesday, and we will, I think, be hanging on his every word to see what the Fed might be up to. Let's get into some charts now. S&P 500. Take a look here at this weekly candle. So when we started last week's analysis, we talked about last week's weekly bar looking ominous, right? That's how we sort of started the show, kind of saying like, hey, this thing looks like, you know, this is where you would see a trend reversal, or you'd see something meaningful take place, perhaps a transition. It doesn't guarantee it's a transition, but it just tells you to look at what's happening here a little bit closer. And this week, we got an inside week. So what that means is we just now have more pressure in this spot. It shows that there's indecision. The market's taking its time here. It doesn't necessarily have to resolve bearishly or a complete trend change, but it's certainly giving you clues, warning signs, and flags right now that something is being priced in. There's a little bit of change underneath the hood, right? And if we go down to the daily chart and we take a look at this price action, we can basically see that it's just moved to messiness. That's the technical term I'll use. It's just a mess here over the last 2 weeks. Lots of, back and forth two-way trading, overlapping ranges, some decent ranges throughout the session as well. This is a market that is just kind of figuring things out, right? And it's a tug of war right now. And I think the levels that we can use here are pretty clear. We're basically going to look at, I would say, the lows from Monday, the 11th, or really you could look at the lows from the 5th of March, right at the bottom end of this little consolidation range. But you have just essentially a couple of markers you can put in just like this, right? Call it 50-90 or 50-60, somewhere in here, this band of support. I think this is where you're paying attention. You're watching to see if these lows can hold here, because if we start to break more meaningful and we start to lose this congestion zone that the market has been trading in for the last couple of weeks now, you're going to start to have some supply overhead here. You're going to get the sellers, the momentum traders that have been wanting a breakdown in this market to really start to dive in here if this market starts to break down. One of the things that we've had a lot of trouble with over the last 4 months, 3.5, 4 months, has been follow through selling. It's been really hard to come by. You've gotten these little spurts of just fast selling with no follow through, or you've gone through periods of just consolidation sideways through time. So far, it is sideways through time, right? We don't quite have a breakdown yet, but this is the seller's chance, in my opinion. I mean, this is as good as it gets here for this market. Perhaps its catalyst is the Fed on Wednesday. Is the excuse maybe the Fed says, you know what, we still don't have enough indication. We're going to need another 3 or 4 months before we even consider, lowering 25 bips. That might be enough to spook the market or to get the market to reprice where interest rates are and to get that breakdown here. So let's pay attention. Let's watch our technical levels. It's very choppy and messy in here. Doesn't inherently mean, again, you should be shorting blindly, but the warning signs are here. Nasdaq 100 looks like it's trying to roll already, right? So this has been, for the last couple of weeks, the weaker of at least the S&P 500. And NDX versus S&P 500. Nasdaq has been a little bit weaker here. You can see that it's just finally starting to get back into this gap, this open gap that never got filled back on the 22nd. So it does seem like sellers are going to want to try and push into this gap here, perhaps fill it, perhaps, run us down to the lower end of these 420 levels and kind of probe to see what kind of demand comes out, at this area. But Nasdaq looks like it's rolling in progress. Looks like, you have some technical levels here you could use against if you're short this market or hedging your long book or whatever the case is in your particular portfolio. But it looks like you've got a little bit of this roll kind of breakdown action at play. Longer term, of course, time frame is everything. Longer term weekly chart, I mean, the thing is still in a very strong uptrend. It's covered a tremendous amount of ground since the last quarter in 2023. So again, some digestion here. We talked about it last week, coming all the way back to 415 in the Nasdaq 100, which would be another 4% sell-off, would still keep this market looking extremely healthy on longer term time frames. Resets like this, I think, are sort of necessary in the grand scheme of things. So let's see how this continues to play out. Russell 2000 definitely was the underperformer this week. It was a little unfortunate to see. Certainly throws some cold water on the thesis that we've been talking about last week. In the last 2 weeks, in fact, we've been talking about underperformance in the Nasdaq 100. We were sort of expecting the tech trade to be heavy, mega caps to be heavy, Qs to roll over, and we expected a little more resilience out of the Russell 2000. Not so sure I have that same confidence anymore after this week. We definitely got a little bit of a change of character here. Nothing major. We didn't break any major technical levels, but we certainly kind of thrusted off this upward trajectory here. We did, kind of poke our head out, breaking out over this 210 area, 208, 207 area, we kind of failed. We pushed back into this range. So for me, I think Russell 2000, I would sort of downgrade it. If I were an analyst here, I'd probably say just market perform now. I don't know. I don't have as much confidence to say that it's going to be an outperformer relative to the Nasdaq 100 in the short term. It just might need to kind of tread some water here. I still think if we can stay over 190, consolidate in this range, I think there's still a great shot that we do get the rotation, the breakout over 205, 210 area. I just don't know that it happens in the very short term. I think we need some more time here. So that's the way I'm looking at all of the major markets. Let's run through a couple of other things here, and then we'll look at some individual stocks. So let's go to gold first. Gold here, very strong. We're talking about gold, the beautiful breakout over the last couple of weeks. Still looks great. Nice consolidation. It's a weekly chart. This helps smooth out the noise here, but this is a great looking kind of digestion week, holding the top end of the range. If we go down to a daily chart, you get a nice kind of flag brewing here. Let this play itself out, but gold looks pretty healthy. If we take a look at oil, you can see this was up 4% this week. Bullish engulfing bar, working out of this breakout here. Longer term, it's still kind of in this messy zone that it's been in for the last couple of years, but certainly getting a little more upside momentum here as the price of crude oil starts to rally up. If we go to Bitcoin, I actually made a Bitcoin dashboard here just to make it easier. So on the left-hand side, we've got the spot kind of commodity Bitcoin prices, and then we have the IBIT iShares on the right-hand side here. And you can see again, this is just still in a very fierce uptrend, but we're getting a little bit of sell pressure here for the first time. We saw one of the biggest down candles in IBIT or in Bitcoin yesterday on Thursday. So it was down 7%, or if you're looking at IBIT, it was down 5.82%. I suppose this is the tricky part when you're comparing, because this is more a 24/7 cycle on the left-hand side. This is the 9 to 5 Wall Street, sort of cycle here. So things do look a little bit different in terms of percentages. So I'll try and stick to just the IBIT, because that's probably what most people are trading watching this video. So you can see, again, a little bit of thrust off this trajectory here. Bitcoin, just like the Nasdaq, has just been on such a strong move that I think some consolidation here, particularly at the prior all-time highs around that 69, 70,000 Bitcoin, makes a whole lot of sense. We basically zoomed up like a rocket ship right into it, and to just cut through that and just rip, it seems, a little bit high risk, let's call it. So some consolidation here makes sense to me. I still love the actions I'm seeing underneath the hood with the flows coming into ETFs here. So I'm not wavering whatsoever on the longer term outlook here for Bitcoin. But I think in the short term, a little bit of digestion makes a whole lot of sense. So good action there. Much needed consolidation. Let's get into some individual stocks here, and then we'll probably round it out a little bit quicker today. NVIDIA. So this was one of the first kind of warning signs here that the market threw at us. That was back on March 8th when we had this massive bearish engulfing day with some heavy volume. We did get a minor amount of follow through, and then Tuesday we kind of squeezed right back up, and now we're fading a little bit here. So once again, NVIDIA in consolidation mode, full stop. Hasn't quite broken down, hasn't quite seen aggressive selling or rotation out of it or major trend breaks, but it's certainly in this kind of consolidate sideways zone and a wait and see type of mode. So I would be giving it time there. I think, arguably we're still probably sideways to slightly lower, but I'm not seeing anything too strong one way or the other. AMD, Advanced Micro. So if we look at something like this, another big semiconductor, our shorter term trading system, our Lamerick trading system actually put a position on in this morning in AMD. So we do have a current long position in AMD. It's a short-term active swing trading system. So this could be out on, Tuesday of next week, let's call it. It could be very, very quick, in for a very fast trade and then out. But AMD here, again, you can see just the semi-trade kind of cooling off, pulling back. This has had a more significant 18% pullback. So this one has reset itself a little bit, kind of check back to the top end of this range. So decent look here. Again, kind of in consolidation mode and wait and see mode, see if it can put in those higher lows. We had Microsoft that was breaking out to new all-time highs on Thursday, certainly gave a lot of that back on Friday, but still so impressive to see the strength here in some of the large cap tech that continues to hold up. Google also, really moving up this week, 4.3%, maybe TikTok and some of the potential banning and just all the things happening over there starting to benefit maybe Google. Maybe they're getting their act together on the AI scene, but nice, rebound there, helping kind of prop up some of the market. And even Apple, as terrible as it's looked over the last few months or couple weeks at least, it was up 1% this week. So, I mean, if you didn't have Google, Apple, NVIDIA holding up, this market would have been a lot uglier. But you really had a couple of heavyweights really doing some good technical work to the upside. So that was encouraging to see. We'll see if they can continue to, fight the good fight. And let's round it out here last with our strongest and weakest layouts. This is a TC2000 layout we have on our website. It's built. If we take a look here at the 1 month best performing sector in the past 1 month, it's now energy, up 7.91%. And if we look at energy over the last 5 days, it's also the best performing sector. And if we look at this little check mark, this column here just shows we have a 1 month high. There's no other sectors making 1 month highs right now. But if we do take a look at energy, this blue chart right in the top left here, you can see we got new highs in motion here. So nice rotation this week, of course, on the back of oil. We'll see if it can persist, but it's had a nice run. If we look at the bottom here, we can certainly start picking out some of these individual stocks that have been, helping push this XLE higher. And you can certainly take a look at this list here. This is sorted by 1 month returns. So you can see the best performing is DNOW. I have never seen this stock before, but it's up 47% over the past month. And certainly helping lead the charge higher here. So I'll let you look through this. You can pause the video, look through those stocks if energy names are interesting to you. So I think that's a great spot to leave it. Let me know your thoughts. As always, I invite you to leave a comment below. What did I miss? What are you looking at? Oh, actually, you know what we didn't look at, and I just want to make sure I at least mention it, is DBA. DBA, just absolute monster move here. Take a look at the weekly chart. This is the Invesco agriculture ETF, and you can see just a big move up, 5% this week to new cycle highs here. So very impressive in the face of a strong dollar, and certainly just kind of fueling on that trade. So I always lead with things at the start, and then I forget to take a look at the chart. So glad we got that one in there. As I was saying, thanks so much, as always, for tuning in every Friday. Long form market analysis just like this. Subscribe to the channel if you're not already. If you're a long-time listener, thank you so much for tuning in. Let me know your thoughts in the comment section below. We got links in the description of this video. Have yourself a great weekend. We'll see you back here next Friday. Take care.